Freddie Mac have cost you and me more than $180 billion, and they keep on asking for more. So is it time to do away with them? Republican Senator Bob Corker of Tennessee says yes, it is, and he's got a bill that lays out just how to do it, and he joins us now. Senator, thanks for being with us. So,
I'll be with you, Jerry.
I understand you had a hearing on this today. You talked to Ed DeMarco, and he had something very interesting to say to you about conservatorship. Fannie Mae, Freddie Mac, they're these weird half public, half private kind of companies at this point. And he said that because of that, taxpayers are even more on the hook, if that's possible. What did you make of that comment?
Well, I mean, what's happened, Jerry, is, we had a lot of people beating their chest during financial reform about the fact that we needed to do something with Fannie and Freddie, but they're in a state of permanent conservatorship. Nothing's been done to change their status, and right now 90% of the mortgages that are done in America are done through Fannie and Freddie. They manage $5 trillion worth of assets. This year alone, they'll take on $1 trillion more in assets. So what we need to do is figure out an orderly wind down, and so we've been working on this for some time. We know that Fannie and Freddie cannot exist into the future as they are, and so we want to wind them down steadily over time and get mechanisms in place to cause the private sector to come in and take up the slack behind Fannie and Freddie. Yes,
Senator, this is trickier than you might think, though, right? I mean, because the market's going to anticipate anything you do. So how do you get in there, wind this thing down when the entire market depends on Fannie Mae, Freddie Mac backing up these loans?
Well, actually, the entire market doesn't depend on that.
A lot of it does.
A lot of it does, but Jerry, the portions that are above the top loan limit today of 625 actually are being, mortgages are taking place in that market. So what you can do, what we think you can do is get the federal government to start next year just guaranteeing 90% of the loan that's originated, then 80%, then 70%. And as that drops down, we think the market will send signals as to what the difference in price is between what the government is actually guaranteeing and what they're not. We think that we've created a mechanism that really does, over a 10-year period, create an orderly wind down of Fannie and Freddie and puts in place the infrastructure for the private sector to step in behind it. A big part of the problem right now is the private sector is on strike, and so we've got to create some standardizations and other types of things, reps and warranties, so that they know the credit that is actually coming into their portfolio that they're buying is the kind that they want to take on the risk with. So we think we can do that. We really do.
I don't see how you guarantee widespread participation by the private sector because they're so reluctant to lend in so many areas right now.
Yeah. Well, we think we've built something that makes and causes and allows that to take place. We really do. And for what it's worth, this is not some deal where we woke up one day and said, hey, this is what we want to do. We've been working on this for about a year.
Right.
We've talked with mortgage investors. We've talked with people in the private sector about the kind of things that they need to come back into the market. So I really do think we can accomplish this. But let me say this. What we're doing right now, Jerry, is totally unacceptable. I mean, right now we have a permanent conservatorship where, in essence, the federal government is overseeing two organizations making up $5 trillion worth of mortgages. That is totally unacceptable. And I don't think that America wants to see the federal government involved in all mortgage financing, which we're almost doing now. So I think we've come up with a concept that will work. We obviously are getting input from both sides of the aisle, and we want to continue down this path of making this happen.
You know what's interesting, and I think a lot of people don't recognize, is just how big these institutions are. If you compare, say, Fannie Mae and the Bank of America in terms of assets, Fannie Mae is 50% bigger. These institutions are huge. Now, my question for you and your plan, and I know this is maybe in the weeds just a little bit, is how do you unwind the mortgages, securitized mortgages that Fannie Mae and Freddie Mac already have on their books without driving that market into the toilet?
Well, actually, the mortgages that are on the books have to stay in place the rest of their life. So, what you do is you start unwinding new originations, but you just are on a very valid point that says, hey, look, the ones that already have the government guarantees, those have to stay in place. Now, the average length of a loan today in America is about 7 years. So even though you're making a 30-year loan, most people refinance, buy a new home, sell the house, do something else. But you're right. I mean, it's going to take it's going to take decades, Jerry, for all of these to wind down off of the government books. But just think, every year right now we're putting another $1 trillion worth of new loans on the books, which again will have to run off over a long period of time. So now's the time to start. We think this can work, Jerry. We really do.
All right.
And we think it's important to the American taxpayer.
Thanks for coming on and describing it to us. I really appreciate your time. And you've got to come back if this thing actually does see the light of day and you get widespread support and this becomes law, because it'll make a very big difference. Thank you, sir.
Thank you. Thank you very much. Appreciate it.
Up next, more on Fannie and Freddie. We bailed them out with our hard-earned tax dollars, and their executives are reaping all the benefits with big-time bonuses. What Congress is doing about that?